So that's equities, but let's find out what's the big news in the world of commodities. We have Manisha with the latest. Manisha, tell us what's on your radar.
It is crude oil prices because it's been very, very volatile. Having said that, it has been trading within a range, but we are trading at a 7-week highs at this point in time. All focus, and I'm assuming all asset classes as well, are looking at the US and China trade talks, where we do know that there has been a lot of progress, but the final notification or the word on the paper is yet to be seen there. The markets also are looking at Canada entering into direct talks on tariff with US as well. So some positivity coming in on the tariff side, and these are the major consumers and producers as far as crude oil is concerned. So the markets are looking at some ease in sense of prices there. Apart from that, we also have seen Saudi Aramco cut China shipments by 1 million barrels for the month of July. So even as OPEC and allies have increased production for the month of May, June, July, and perhaps going forward as well, the expectation that the OPEC plus production may not result in significant supply boost has also been supportive for the prices there. And then there are geopolitical tensions too, which are adding premium to prices. Iran, for one, is expected to submit a counter proposal for its nuclear deal. And then European Union also is coming out with an 18th package of sanctions on targeting Russian energy sector this time around. The markets are looking at potential increased US sanctions on Venezuela as well. So all of those geopolitical tensions and developments and statements every day is what is impacting prices. It also is about Saudi trimming July prices for its Asian consumers, ensuring and expecting that the Asian consumers will be looking at a higher demand going forward. The peak summer travel demand season for the Western world, which remember the vacations for that and them start mid-June, is also expected to be positive. But the most supportive of factors clearly comes in from US. The very interesting IEA report came in last evening, which tells you that the US oil and rig count has continued to decline, even as we've been talking about drill, baby, drill and higher production from US markets. But that is very clear on your screens right now. For the last 3 years, and this is the third year, by the way, when we have seen the number of rigs in the US continue to decline, 20% down in 23, 5% down in 24. And this year, until now, we've already seen a 6% decline. Now, the result of this doesn't come immediately. When a rig is shut or a planning for a rig is being made for it to be shut, the final number changes only after 12 to 18 months. And that's exactly what the IEA also says. They say that by 2026, you could be looking at a lower production coming in from US. So while we've seen 13.5 million barrels per day of a record production in this quarter, next year could be much lower at 13.3. And this could be the lowest perhaps in last 4 years in sense of production, clearly supporting prices going forward.
Okay, all right. So that's all about crude. But Manisha,